Live in the real world, live in the world as it is, not as you wish it were. And once you live in the real world, whatever is in front of you, deal with it.
Imagine the startup founder and all of a sudden they scale massively and have tons of money. What would be the stupidest decision?
Don't think you're a genius. You worked really hard and you probably got lucky. And so now the question becomes, what is this money about? What is this money for? I've seen this where people make money and it's like the scariest thing that's ever happened to them because they're like, holy smokes, like this is a big responsibility.
Knock, knock. Here's what you're going to do and you're going to be good. And you're like, yeah, I'm going to do right that.
My clients, at some point along the way, they feel like they're not in charge anymore. They're disintermediated from their own money. It kind of vanishes, it disappears, if you will, into the big machine.
I'm so happy to talk about your journey.
I sat down for coffee with a friend before I started the firm. And he said to me, whatever you do, don't do it for 6 months.
What not to do with the money?
Don't let the money define you. Define it so that you have a healthy relationship to it. It's very easy to go from 100 to 0. It's shockingly easy.
Welcome to episode 6 of the First Time CEO podcast. Today, my guest is Jonathan Treussard, the founder of Treussard Capital Management. He has over 2 decades of experience at the top of academia, billion-dollar family offices, and global asset management. Jonathan brings an unparalleled background to guide you and your portfolio through complex financial landscapes. We've discussed how first-time CEOs can prepare for uncertainty and build financial resilience, the transition from expertise to business leadership and why mastering operations is crucial, common financial pitfalls for startup founders and how to avoid reckless spending, the power of trust and word of mouth in building and retaining a strong client base, the importance of long-term vision and sustainable growth over short-term wins, and more. And with that said, I invite you to join us. Hello, hello, hello. This is the First Time CEO podcast, and I'm your host, Victoria. I am the co-founder and CEO of Olympia. We provide entrepreneurs with AI teams. I will leave the link below in the show notes. Also, please follow the First Time CEO show on YouTube, Apple Podcasts, and Spotify. I will leave the newsletter as well. Subscribe and get the insights from other fellow first-time CEOs and my reflections on being a first-time CEO myself. I am here with Jonathan Treussard. Jonathan, how are you?
I'm doing well. Thanks for having me.
I'm so happy to have you and to talk about your journey. So tell me how musician from Paris appeared in the United States and became a financial advisor and wealth manager for multi-billion family offices.
This is all a terrible mistake. So you're right. I grew up in Paris. I thought I was going to be a musician. I wanted to be a musician, a professional musician. I grew up, predominantly playing jazz in Paris. I had a fabulous mentor, though obviously when you're, a kid with a guitar in the 90s, you think Slash is pretty cool too. So not just jazz. But I was finishing high school. I wanted to be a musician, and my mom, God bless her heart, had this notion that it was too risky of a career. So she wanted me to go to musicology programs so that if it didn't work out, I could be a high school music teacher, which, honestly seems like a lovely thing to do, but it just wasn't for me. So I decided to kind of blow up the frame a little bit, to start my own path. So I bought a plane ticket by myself, behind my parents' backs, and I sat them down for dinner, and I said, "Look, I'm leaving for Los Angeles in 2 weeks." So that was an exciting dinner time as a 17-year-old.
Wow!
But I did.
Brave.
I know, but I did. I literally 2 weeks later, I was on a plane. from Paris to LA. And it was the scariest thing I ever did. I literally hope and prayed the whole time the plane would just turn around. And it didn't. And I'm so grateful that it didn't. I ended up in LA. I stayed at a hostel in Hollywood. It was not exactly a fancy operation. It was 8 guys to a room, to give you a sense. And so I shared a bunk with a kid who was, 3-4 years older than I. He was probably 21, 22. And so he was very mature relative to me. And he said to me, well, look, if you want to stay in this country, you may want to get papers. And I literally, I was a kid. I hadn't thought that far. So that was good advice. And he said to me, the best thing you can do is just go to community college. It'll be relatively inexpensive. It'll be easy, and you'll be a student. And so you have a student visa. So that's what I did. I signed up for Santa Monica College. I got a student visa, and it turned out that very quickly I loved learning. I loved thinking, and I was a good student. I've always been a good student. But that proved to be true, even in a language that wasn't my own. So I ended up being a very good student, a very committed student at Santa Monica College, and I transferred to UCLA, it literally felt like a dream come true. I had fantasies of going to UCLA. I never thought it would happen. And in my first term, I took a class in economics, in the economics department. It was kind of a weird class. I'm not sure, it must have fit my schedule somehow. It was on labor economics and labor unions. And I sat in this classroom, sat in the front row. And I waited, and something like 10, 15 minutes after the start of class, this guy walks in wearing cowboy boots and sunglasses, and his name is Earl Thompson. And Earl became my mentor. He taught me so much economics. He was just an incredible thinker, and he was just a fabulously generous guy. And so I ended up learning a lot of economics very early on as an undergrad. I ended up writing academic papers as an undergrad, which, barely ever happens. And this happened to be right around the time that the tech bubble had burst. It was 2001. And so one of the big questions was, how could this possibly happen? How this absurd market behavior, kind of these epic bubbles could even happen. And so we spent a lot of time with Earl studying bubbles, studying markets, understanding, and this is fundamentally the same thing that I continue to be committed to today, which is, how do you understand the mechanics of markets? How do you understand the psychology of markets? Because it's always about both of these things. It's about mechanics and it's about psychology. So that's how I ended up, falling in love with economics and markets. I wanted to be an academic. I wanted to be Earl. So I applied for doctoral programs, and literally the same kid who had said to me years prior, you should go to Santa Monica College for the student visa, said to me, I know you've applied to UCLA and other schools, and this might have been late at night, possibly, under the effect of some degree of alcohol. And he said to me, have you thought about Boston University? It's a private school. I'm sure they have money. That was like the sum total of his analysis. And so I applied to BU, and it was a fabulous decision because I did get into UCLA for the doctoral program with no money. I would have had to pay out of pocket, which I was in no position to do. And I got into the econ doctoral program at Boston University with a full presidential fellowship, which means I actually got paid to get my doctorate.
Wow, that kid was like your angel.
I know, it's true.
Like, knock, knock, here's what you're going to do, and you're going to be it. And you're like, yeah, I'm going to do right that.
Exactly. But it was, it was really the first hard economic decision I ever made. I never wanted to leave LA. I loved California with a passion. Honestly, I would have lived on UCLA campus forever. But the right thing to do, the smart thing to do was to move to Boston, which I did reluctantly, but it turned out, incredibly positive. I learned a lot. I met a guy, again, in my second year in the business school who said to me, everything you like about economics, making decisions under uncertainty and the strategy of all of that. In the real world, we call that finance. We call it investing. So why don't you do that? So I became specialized in finance as a doctoral student. I learned option theory. I learned finance from some of the top people in the field, including the people that turned it into a science, people like Bob Merton, who ended up giving me my first job. But the same guy had a daughter who would come back from New York on a regular basis, and she ended up being my wife. So, sometimes... So that life has a way of kind of presenting itself. So that's exactly. So that's the full story on the academic and personal background.
How wonderful! It's so
yeah.
impressive. I'm very impressed, and I'm happy to know so much more about you today. So what happened in between that student? Very hardworking, very into economics and finances, and opening your own firm.
Yes. Well, so it was a long path, and part of the long path, again, I got my doctorate in 2007, early 2008, and I started my own firm, Treussard Capital Management, in 2023. So we're talking about, a number of years. And I did, and part of it, honestly, is... It is my sincere belief that, and I say this now, even though I really do have, rather unusual experience in education. Wanting to manage people's money does not give you the right to do it. It's an incredible responsibility. And so what happened in the interim was I acquired the experience and the knowledge required to feel that, I was more than up to the task of that responsibility. Again, I was an option theorist at a time when most of academia was really empirically driven. But I had the great fortune of having a skill set that was very applicable at that point in time. And so I was contacted by a family office in New York. You mentioned family offices. I ended up working for the Ziff family, which is an extraordinarily wealthy family in New York that had a very sophisticated family office, that had just about every investment strategy known to man. Think hedge fund type of strategies going into the financial crisis. Remember, this is 07, 08. And someone reaches out to me and says, hey, we'd like to talk. And so we met. And this guy, Alec Crawford, was building a robust risk management group for the Ziff family, literally weeks, months before, the financial crisis really kind of blew up. And I moved to New York. I worked for Alec and the Ziff family from 08 to 2014 in risk management, in investment strategy. And I repeat, some of the most sophisticated strategies you can think of on a multi-billion-dollar basis across the world. And honestly, I think about those people along the way, people like Earl, people like Tzvi Bodie, my father-in-law, people like Alec and others come to mind, Katie Sherrod being another. Those are the people that teach you so much because they kind of like believe in you before you believe in yourself. And all you have to do when you're in that place is to trust them, right? That, yeah, you're okay. You're up to the task. And so I worked for the Ziff family for a number of years through the financial crisis where, again, I learned so much about the way markets behave and misbehave, and how to think about risk and investment opportunities. Then we had the kids in Brooklyn, in New York. I still had the California bug. And so as my time with the Ziff family was coming to a close, I was speaking to a lot of people in California, and that brought me back to California, working at Research Affiliates. Research Affiliates is a very large $150 billion global asset management firm that works with, a whole bunch of firms around the world. PIMCO, State Street, Legal in General in the UK. I mean, just so many gigantic firms. And after joining Research Affiliates and coming back to California, somebody looked at me with great wisdom
Again.
Katie shared. Yes, and said, you don't want to be running regressions for the rest of your life, do you? I was supposed to be on the investment side of things, and I said, you're onto something here. And so I ended up running the business side of Research Affiliates globally around the world, working directly for Katie, who became the CEO for Research Affiliates. And so that's where, in a lot of ways, I learned what it means to be a business person. And that was kind of the missing ingredient, which got me eventually to launching Treussard Capital Management a couple of years ago, because I really strongly believed that I had the investment knowledge and experience required, but I also knew how to run an investment company. And so that was what it took.
Yeah, it was like, why don't I run my own company now that I have all this experience? So what were the key lessons that you learned during that big crisis period at Ziff Brothers?
Understanding that while you can't predict what is going to happen, you can put yourself in a position to survive, thrive, whatever the verb is, through a lot of environments. And in a lot of ways, it's in your hands to put yourself in that position, to make sure that whatever happens, even the bad stuff, because the bad stuff does happen, you have staying power. You have the ability to stick with it. One of the things, and again, very much driven by my understanding of option theory and all of that, one of the things that I continually think about is your fate in your hands, or is it in somebody else's hands?
For someone who doesn't understand anything in finances, but would like to know more about it and understand how you could potentially help them, can you tell more about your services? And there are first-time CEOs with capital. So let's talk a little bit about that.
Absolutely. So what I do now is I run a boutique wealth management, Treussard Capital Management, that again is predicated on everything I just told you, my knowledge, my experience, and brings all of that to wealth management clients, okay? And what that means, of course, is, people with resources, people with assets who are not billionaires. The idea is very simple. By the time you get to have hundreds of millions of dollars, billions of dollars to your name, you have your own investment firm, you have your own investment team, and that's a family office, right? That's the literal definition of a family office. But there are a lot of people that, have been very successful in this world, often through hard work and building companies, people that at some point were first-time CEOs. And they make money. They sell a stake in the business, they have a very successful business. And they do the obvious. They go to, what I would call the wealth management industrial complex. And they think they're getting, personalized service and a true partner in whoever they're working with. And they tell me, because, these are my clients, that at some point along the way, they feel like they're not in charge anymore. They're disintermediated from their own money. It kind of it disappears, if you will, into the big machine. Of course, it doesn't disappear, but you get the point. It gets, and for people that have worked hard, created success for themselves, the idea that now it's just kind of like on autopilot somewhere, and that it's part of the big machine, and there's all sorts of complexities that come along with it. I'll see people that have like 7 or 8 accounts at one financial institution, and I'm like, is this by design? Is this something you wanted? Is there a reason for this? And they say, I don't know, this is how they set it up. And so that's what I do. I become I do what I've always done in starting with kind of my family office experience. I say, well, what do you want? What actually makes sense for you?
That's a lot of responsibility, and it's a lot of money. And why, Jonathan? Why people trust you? How do you make sure the money is secure?
So first of all, there are no guarantees, right? The first conversation I have with people is about the bad stuff. It's about, hey, what happens in the market falls a bunch. I mean, I literally, I generate scenarios, right? It's like, well, here's what the portfolio would do if the financial crisis happened again. Here's what would, if 2020 happened again, the COVID crisis, whatever. So part of it is living in the real world, and in the real world, we can do smart things all day long. Now, you can also do some really dumb things, and my job is to make sure that we steer clear of the dumb things. But even in the smart decision world, bad things happen. And so, and I think that's part of the answer, honestly. Some of my clients, are like, wow, it feels kind of like a bummer, right? To like the first conversation to be about the downside. But then when they realize, 6 months, a year into the relationship, and some people have said this to me, they say, I love that you talk to me about the bad outcomes, even when the portfolio is going up, because when we have a bad day, a bad week, a bad month, like I'm okay with it because you've forced me to think through it. So part of it is just, again, I hesitate to use the word honesty because who knows if you're honest or not, but intellectual honesty, to talk about the world as it is, as opposed to as people would want it to be, which is, it only goes up or whatever.
What if you make a mistake?
Totally. Well, you own it. I mean, a huge part of it is you can make a analytical mistake. You can, by the way, even if you don't make a mistake, you can look stupid for a very long time, for a variety of reasons, which we can talk about, but they're kind of like investment geeky, nerdy stuff, right? I and many, many people who think the way I think have been, worried about U.S. markets for a period of time. It's been on a tear, which means prices have gone up. It's become a very concentrated market where only a handful of companies, the famous Magnificent Seven companies, have been driving the market. Valuations are high, blah, blah, blah. So for a lot of clients, it's made sense to diversify away from, U.S. only. Now, I want to be clear, like nothing is, I don't live in a world of extremes, right? So it doesn't mean like no U.S. stocks. It just means like, okay, let's think about what it looks like to be invested in international markets, so on and so forth. Well, through 2023, 2024, you look kind of like an idiot, right? Because the easy thing to do was to buy U.S. stocks and watch them go up 30%. But of course, some of it is just being okay with discomfort.
That's how life is.
That's right.
No, the only certain thing in life is uncertainty. Change.
Yeah, that's right.
What challenges did you face starting your own firm, and what have you learned since then?
Well, as I told you, I have a weird psychological makeup in that on the one hand, I'm very risk sensitive. That's part of what I do. And I'm perfectly comfortable when it makes sense in my personal life to do kind of big, scary things, right? I mean, I got on a plane when I was 17 years old by myself. And so part of it is accepting that this is a big, scary thing. It just is, right? Now, as I said, I was very intentional in terms of waiting until I had, acquired the assets, including knowledge, to feel like I could do this. But I think you just have to go with, I remember, the first thing you have to do, obviously, is I run a registered, regulated entity. So you have to register the firm and you have to go through a whole bunch of regulatory stuff. And I remember like agonizing and delaying making the decision to like hire the firm to file the paperwork, right? Because that step made it from an idea to a real thing. And once I had taken the first step, which is like, no, we're doing this, like this is a real thing, then it's just building momentum and muscle in moving forward.
Did you have any fears that, what if I fuck up? What if I make a wrong decision? What if the client loses money because of me? Did you had any doubts, or you were like, I have knowledge, I know how to do it, I'm on it?
I mean, you have to be a sociopath not to have doubts and fears. So I have doubts and fears every day. I mean, it's just, if I told you otherwise, like run, So part of it is, and again, I know this because of what I do for a living. It's all about discomfort and just sticking with it when it gets, when it feels hard and scary and all of that, but recognizing that kind of whatever you're facing, there's always an action you can take to make it better. There's always an action, if there's a business thing that needs to be resolved, well, resolve it. If there is an investment thing that deserves to be looked at, look at it. I'm a sincere believer in live in the real world, live in the world as it is, not as you wish it were. And once you live in the real world, whatever is in front of you, deal with it.
How did you acquire and keep acquiring your clients, and how do you keep them working with you long term, the retention thing?
Sure. So it's not like I started this firm with people lined up and all that type of things. Basically, if the people who know me continue to say, yeah, Jonathan's on it, like he knows what's going on in markets, he's on it when it comes to the economy, whatever. And if they're reminded that this is what I do now, I don't work for a single billionaire, I help a number of clients, then when someone comes to them because they're a known financial professional, I say, hey, Bob, I have my current financial advisor. I don't know. I don't feel great about it or whatever. Hopefully my friend Bob or Jane can say, I know Jonathan and I used to work with him and he's pretty solid. That sort of thing. So that's a huge part of it.
Word of mouth, right? A lot of word of mouth.
It has to be because, again, like this isn't like there's no job posting, right? There's no place where you go like looking for financial advisor, apply here.
Yeah.
So a lot of it is, so it's all about that, which again is why the writing is so important. Doing a lot of promotional activity. It's not because I'm promoting myself. I want to make sure that people are constantly reminded that this is what I do now. And it's now been 2 years and it's so much fun. I really believe that relationships and friendships are like an asset. I sat down for coffee with a friend before I started the firm. And he said to me, whatever you do, don't do it for 6 months. And it's so important, right? Because it's like nothing happens in 6 months. Like you're kidding yourself. And so that's part of it.
It means just keep going, right?
Just keep going. And I tell people, because I think it's true, that they will have a direct relationship with, a true partner. And no BS, as my wife says, no dear sir, madam nonsense, nothing, we've all gotten those letters, right? Dear sir, madam, like just delete. Yeah. And so if my clients feel like they have a direct relationship with a true partner, then it's word of mouth. It's all word of mouth.
You are your own brand. And the way you show up online and offline at some private events, at some networking, you are representing what you do. And you kind of don't need anyone else to jump around you and like, yeah, this is Jonathan. You're okay.
Yeah, and again, part of it is if you think about, those things, well, what I do is also very sensitive, and it's about people's money and people's personal information and all of that. And the hurdle for trusting somebody else with that knowledge about your finances, about, your personal information is extraordinarily high.
How do you use AI today?
I don't use it for client information. I love the work, number one, serving clients. I love building a firm, and absolutely it can be lonely, right? So to the extent that sometimes you're kind of stuck in your own thoughts and you can have kind of a discussion partner, that's helpful. I use it, but so much of what I do leans into, as I said, authenticity and the power of my personal voice. I can't use it to write. I can use it to like check grammar. Your improved web searches, I think, is a huge deal because like the ability to kind of do a web search and summarize it and give you verifiable sources and URLs, that's massive. The moment you don't trust the tool goes bye-bye, right?
And we are working now on a deep research feature where it's not surface level research, where it's just like deep industry research and can give you like the full report on what's going on in the industry, for example. And I understand what you're saying. I love authenticity myself and write in my newsletters. So what I do is I write what I want to write, And then I check with Olympia and I ask our editor, for example, AI editor, to criticize my work, and maybe I get some ideas from that, and then
That's
edit the
right.
grammar, edit something. So it's like a canvas.
And it's a it's a discussion partner. I mean, again, that's what I was describing to you. I think it's exactly right. Whether it's about, hey, I'm thinking about this, whatever, this kind of business related thing, or you're writing, or the idea that it does something independently. I don't think we're there. The idea that it forces you to reflect, is very helpful.
What trends do you foresee in the future of wealth management?
I mean, one of the reasons I launched my firm now, recently, there's been a cycle. And the cycle was, once upon a time, we had an army, an industry of stockbrokers. And these people were just, yeah, they were kind of like managing your portfolio, but they were really like calling you and pitching you stocks. And the reason they were doing that is because they were paid on commission. Right. And so there was a huge trend from kind of the 90s on away from stockbrokers and what insiders would call wirehouses, just big kind of commission driven firms, to independent registered investment advisors and fee only advisors and wealth managers. So I think what I fear we're going to see is a period where it's more about building scale and kind of back to the old model. And my hope for Treussard Capital Management is, in addition to serving my clients directly in this very personal way that I've described, maybe it becomes a platform for people that kind of don't want to join the impersonal big behemoths.
Speaking of young people, some startups are still on the rise. Imagine the startup founder, and all of a sudden they scale massively during 1 year and have tons of money, and they crack the code. The first time CEOs that are scaling right now massively, what not to do with the money?
I think it's helpful to realize that the thing that probably generated the wealth was inherently concentrated, right? You leaned into your startup, into your industry, and somehow you cracked the code and you're one of the winners. And the reason I say winners is because it really is, the intersection of hard work and luck. And so then you're staring at this thing and you're saying, wow, I was successful and lucky. Let's accept both of these things. I think it's very easy to think, well, I did this like incredible thing. And you did, by the way, you did do this incredible thing. I must be a genius, right? So that's number one is don't think you're a genius. You worked really hard and you probably got lucky as well. So now the question becomes, what is this money about? What is this money for? And some of it is going to be to continue to pursue big, kind of multiplying effect type of endeavors. But some of it is now like, okay, this money is generational. This money is, whatever your thing is. So that's number one. The first one is recognize, and by the way, we could have all sorts of fun conversations about my opinions on crypto or whatever, but I would file that under, things maybe not to do. But so that's one aspect, is to think that you have to keep doing the same thing, which is concentrated, kind of up or out kind of bets. The other thing, by the way, which I would equally encourage people not to do, is to stare at this money like it's a curse. I've seen this where people make money and it's like the scariest thing that's ever happened to them, because they're like, holy smokes, like this is a big responsibility, right? I talk to people and I'm like, did someone die in your family? Like, why are you so sad? And so I guess my biggest piece of advice is try to be objective about what it is. It is not you. It is a thing. It is money. Because if you start to think this money is like my identity, if you feel that way, people will project that onto you. They're not going to think of you as a person. They're going to think of you as a big bag of money, which is like an awful thing to feel. And if you make the mistake of defining yourself relative to the money, then either you're going to fall into the trap of like, I got to do it again. I got to turn this thing like 10 times, right? Which is a boatload of pressure. Or the other thing, which is, and I talk to, people who serve not only first-time wealth generators, CEOs, but also like second generation. And, people talk about being the steward of wealth. And the steward of wealth is like, well, grandpa built a business and then we sold the business and now we have all this money, right? And when you say, well, you're the steward of your family wealth, what you're really saying is grandpa did something amazing and your number one job in life is to not F it up. And it's just an awful way to live, Like all you can do is screw up. Don't let the money define you. Define it so that you have a healthy relationship to it. And then, find someone that you feel like you can work with to actually invest it and put it to work. But, number one is like, it is not you.
Yeah, and there is another tendency to just start spending it like crazy and buying expensive cars and watches and flats. And, and it's like,
Totally.
Whoops, where is the money? There is no money.
Oh, totally. I mean, it's like, but yeah, I mean, there is the old joke, right? Which is, you start with $100 million and then you pay your taxes, and then you get divorced, and then you get like one or two expensive hobbies. Maybe you're into airplanes or something. And then like all of a sudden you're like, what happened to the money? I mean, it's very easy to go from 100 to 0. It's shockingly easy.
Yeah. Maybe you can share financial literacy resources if you have.
Please go to my website, sign up for the newsletter. It's a passion thing I do. So, I hope people enjoy it. 2, this is somewhat off the beaten track, but I am on the board of a nonprofit called WISE, Women Investing in Security and Education. And WISE is really dedicated to delivering financial literacy to women of all backgrounds. If that resonates with you, go to their web. Yeah, if that resonates with you, I would encourage people to kind of sign up for the WISE.
Don't worry, I'm gonna share it in the show notes.
Great. So
I will find it, and I'm gonna provide the link.
Yeah, it's Women Investing in Security and Education, and I think it's a fabulous organization, and I'm really, really proud of the work that the organization does. Again, I'm on the board. I think the only male board member.
Oh.
I listened to the audio book version of Scott Galloway's book, The Algebra of Wealth. And I thought it was a really fabulous book. As a trained financial economist, I literally would say it's 99% perfect. I have one objection with it, and I suspect that the author had nothing to do with it. It starts with a strong dose of, this mindset, the FIRE thing, the like, accumulate assets and then retire when you're 30 type of thing. Mm-hmm. And I don't understand why it starts with that, because the rest of the book kind of has nothing to do with that. And the rest of the book is absolutely fabulous. And I don't object to anybody wanting to, accumulate assets to the point that they don't need to work, by the time they're 30. But I just feel like that's a lot of pressure to put on yourself. And I don't think it's necessarily healthy to put that much pressure on yourself. And maybe, and this is where, maybe there's a little tough love there. Maybe find a career path where you don't want to retire from it when you're 35. Maybe find something you're like a little more passionate about long term.
Well, thank you. Thank you very much for this conversation today. It was great.
Thank you so much.
And I wish you even more success. And you guys, The First Time CEO is going to become a book in 50 episodes, and you will be able to have all the knowledge from these incredible people I interview on the podcast and understand how they started their business, why they started their business, and get inspired by their stories. And they share tons of knowledge on how to manage the company for the first time ever as a CEO. So subscribe to my newsletter, follow me on Spotify, YouTube, and Apple Podcasts, and I'll see you in the next episode. Bye.
I can't wait to read that book, by the way.